Hello and good evening, everyone. Welcome to yet another webinar of SteelMint Engage 3.0, the Virtual Connect. This 4-day webinar series covers a wide range of topics relating to iron ore, coal, scrap, steel, ferroalloys, and graphite electrodes. I'm your host, Lalita, Senior Associate Editor, SteelMint. I also welcome my co-host, Mr. Jay Prakash Sahu, AGM Scrap and Recycling Statement.
Hi, Lalita. Thank you.
On behalf of SteelMint, we would like to thank the Ministry of Steel and Indian Steel Association for supporting the event. This session is on how Indian stainless steel mills are dealing with the global economic downturn. Today's webinar is special in many ways. We are going to discuss about next-gen steel alloy, that is stainless steel. Stainless steel is known as wonder alloy for its recyclability, lesser life cycle cost, and obviously for its corrosion-resistant properties. These properties make it suitable for usage in nation's priority areas like renewable, agriculture, healthcare, infrastructure-related initiatives, and strategic areas like nuclear energy, defense, and aerospace. To discuss on this topic, we have with us our guest speaker, Mr. Vijay Sharma, Director, Corporate Affairs, Marketing and Business Development, Jindal Stainless Group. Mr. Sharma is a well-known personality in Indian as well as global stainless steel industry. Having more than 35 years of industry experience, Mr. Sharma has steered diverse roles in the areas of corporate affairs, marketing and business development, supply chain management, market research, and product development. He has also been overseeing profitability of the service center chains of the Jindal Stainless Group in India and in Spain. Mr. Sharma is graduated from PEC Chandigarh and pursued his MBA from FMS Delhi. He has also done specializations from various prestigious institutions. Welcome, sir.
Thank you.
Before starting the session, let me mention that we will take the audience queries at the end of the guest speech. So requesting all of you to send your queries in the chat box. Please mention your name and company when you send us your queries. Thank you. Now my co-host Jay Prakash will start this session with a brief presentation on overview of Indian stainless steel market. Over to you,
Yeah,
Jay, sir.
thank you, Lalita. Can you please make me co-host so that I can share the PPT?
Sure.
Thank you, Lalita. First of all, before starting the session and before listening to the VSR, I know everyone is curious to listen him more. I want to set a context of this discussion, and we will quickly go through how Indian overseas market is doing right now on a statement view. So just to inform our viewers, we have recently included stainless steel in our portfolio, and we are currently tracking scrap market in Delhi and also the finished market of Mumbai. Apart from that, we are also building on various sets of data sets like import, export, and consumption for the stainless steel sector, and definitely we are going to widen this horizon as a market research group. Yeah. So first of all, this year has started with amazing news for the not only the metal industry but also geopolitical scenarios in worldwide, starting with the COVID and then war, and then now the economic downturn of major economies like China and Europe. So the stainless steel sector was also not was also very volatile just because of the influence of these various factors. And if you look into the merits of production of stainless steel, then as per the recent data from the International Stainless Steel Forum, the production has dropped 3.5% year on year as compared to the first half of 2021. So if we closely look into the numbers, it is good to see that even after dropping 14% in USA market, even China has dropped to 5.3%. Asia is still doing good. So we were still positive as compared to the other major markets. And just to inform our viewers, China has volume of 59% in global mills of production in worldwide. If we talk about the consumption levels, so there was a recent meeting which was carried out in Eastern Steel Forum. So they have forecasted the consumption level to the downside to 0.6% for 2022, but they are very bullish on the 2023 numbers, and they are expecting 3.2% growth in 2023. So that is a very good news for the global industry. And if you particularly talk about the particular segment-wise stainless steel consumption, then for this year, definitely there are challenges in the flat segment. So CR and HR numbers are, on a steady level, but for long products, this year also we will see some positive consumption, and definitely next year the consumption is going to be on higher side for the CR cold rolled stainless steel segment. Apart from that, long product and long product semis are still doing good. So let's talk about the Indian industry and how it was doing and how it is doing in the current year. So if we see historically, the production levels in India, except the 2020 and 2021 fiscal, is because of COVID and other factors, our Indian production has been steadily growing over the years. So this is a good sign for also the growing middle income growing economy. And if we see the 2022 production levels, so there was slight drop in the June, July, and August levels due to the export duty development, which happened way back in the May. And if we see the overall industry, then definitely industry participants are very bullish on the expansion mode. Just looking at the factor that India is growing rapidly, and its stainless steel consumption is going to be higher in future. So even the flat steel producer, the major producer, which is JSL, we are also coming up with a 1 million ton capacity expansion in Jajpur facility, and they're also planning for the blast furnace, the integrated route. So just to inform the viewers, I think India is the second highest consumer of stainless steel, and in fiscal year 22, we have achieved around 3.5 million tons, even in the COVID time. If you talk about the import and export numbers, then it was also we can see that import numbers are definitely the stainless steel imports are also being very steady over the years, and that is also a challenge for the industry. That's why it can't be produced in-house. But if you see the export numbers, then it has also grown to a very good level. Even in fiscal year 2022, we have seen the steep growth of 42% as compared to the previous one. So the last fiscal was very good for the Indian stainless steel industry. So the most topic in this year was the export duty, which was imposed by the Indian government on late on 21st May in 2022. So government imposed a hefty export duties on stainless steel in a bid to preserve the higher domestic prices, higher domestic supplies, and the control rising prices. So inflation has been also a bigger challenge for the governments across the world. So a 15% export duty was imposed in flat rolled products, stainless steel, and a 15% duty was also levied on the bars and rods, as well as angles and sections of stainless steel. So because of this export duty, what is the export scenarios right now? We will be more keen to listen it from the Vijay sir. He will be more able to give insights on that. But if we see the general trend, the export numbers, then definitely the production has hampered. But there is one thing which we can see clearly, is that the long product segment production is still on the same level. So it seems that the most affected segment was the flat one. This can be also witnessed. The impact of this duty can also be witnessed in the stainless steel scrap imports, which is a major raw material for the stainless steel making. Usually for 300 series casting, usually producers are using around 80 to 85% scrap. So these are the export numbers, and we can clearly see that flat numbers have came down significantly after the May, but still long people are able to maintain their export numbers. Although it is very certain that due to the 15% export duty, their margins have cut down. Let's talk about the price trend. How was the price trend this year? So as per the estimate assessment, the 304 grade scrap prices have also came down very significantly, and there was around 35% correction on the prices since the level it was in March and April levels. Even the downtrend has also been impacted by the nickel pricing, since the demand in the China has been a very lower side and the Chinese economy is not performing well. So that was also another factor that commodity prices have came down, and the impact is visible on nickel also. And it has corrected to the 45,000 levels in March, April to the 22,000 levels currently. Another major raw material is ferrochrome, and its prices have again corrected to the January level. If you talk about the scrap side, the mild steel scrap are definitely bullish. Its prices are very strong recently due to the supply constraint, but it has corrected. In a recent month, the price gap has widened. So definitely, the mills are trying to save their margins. It is clear indication that what was earlier trend has now getting changed. So now the scrap buyers are also impacted by the recent move by the government, and also the lower demands, which is not only in the Indian stainless steel sector, but also it was in the global market. So, so it will be very interesting to discuss on the demand side, that how the industry leaders are looking at the demand numbers, not only in India but also in the overseas in the coming months. And also our audience will be interested to know that how the situation and how mills are adopting various measures to overcome that. So now I would invite Vijay sir to please enlighten us with all these questions, with the open-ended questions. Please, sir, over to you. Thank you.
Yeah. Namaskar, Pranam, and good day to all the participants. Thank you, Steel Mint, for continuous opportunities of learning and sharing. Very, very interesting theme. To me, there are two key points. First is the dealing word. Second is the downturn. Well, I have a little different views on this theme. Unfortunately, many of us during downturn, we only talk, and during upturn, we don't even think, because the things are so smooth and so bright. So why we talk only about the downturn? I would like to enhance during my discussions the scope of the topic. I strongly feel that the dealing has to be consistent, continuous, and looking into the short-term, mid-term, and long-term perspective. And proactively, we as an industry need to do something together, deliberate, handhold, and resolve for building the nation and the future. Wherever I participate, I find myself the lone soldier to represent stainless steel. And in these 4 days program, again, I find myself to be alone. So my responsibility and accountability increases. I strongly believe that I have to do lots of efforts to position stainless steel category for the right recognition within the steel family, within which stainless is quite distinct. My learnings will be broadly into the 6 categories. Foremost, of course, stainless steel versus steel, my way of looking at it. And thank you, Vinita, for positioning stainless steel a little bit in the beginning. And I strongly feel that even at the cost of repetition, it is important, because we need to create a lot more awareness about this metal, which Jai used the word green and great metal. The second area I will be talking about would be world around us. We are not alone. Of course, the India story, government role and impetus becomes very, very important for us. And then, of course, industry dealings, industry role and industry commitment, and the enablers and the hand-holding which is required. Small disclaimer, my numbers are going to be directional. They would be simple, not as complex as Jay shared, but very interesting presentation. Thank you for that insight, Jay. I will start with similarities and distinction between steel and stainless steel. Yes, there are certain similarities. Both are part of chapter 72. Indian stainless steel is about 10% of China, and steel is also about 10% of China. Indian stainless steel is about 6% of the world, and steel is also about 6% of the world. Per capita is, in both the cases, 1/3 of the world, and sometimes we start taking a lot of guilt. Unfortunately, our denominator is so big, it's so big, and this sort of per capita is true for most of the other commodities as well. We also have been number 2 in production consumption like steel, but unfortunately, last year, Indonesia dethroned us in production to 3rd category. So these are sort of some uncanny similarities. Now I talk about differences. It's very important to really understand that stainless steel, being a very, very small brother in terms of the volume, about 3.5% of the steel. And very interestingly, this 3.5% is true for India, true for China, true for world also. But depending on the grade and series mix, the value can be anywhere between 10 to 15%. So small, but better contributing. Stainless steel is at the highest level of the value spectrum. If I talk about the form, you would have seen long and flat. In case of stainless steel, long worldwide is around 20%, flat is around 80%, but in case of steel, it is about 50%. This is an indicator towards the applications at a very, very high level. I'm talking about the construction. If we go a little deeper into the various applications, in case of steel, the construction uses more than 60%, whereas in case of stainless steel, it is used only today around 12%, that too mostly in the decorative applications. And of course, automobile, railway transport, both around 12 to 13%. Process industry is another very important application where steel is about 15%, stainless steel is 30%. It talks about the sustainability of the solutions from the manufacturing perspective. And then, of course, in India, stainless steel is known to be much associated with the household and utensil segment, where it is about 44%. So these have been the traditional applications, but going forward, the strategic and evolving applications, which was touched upon by Vinita also. In addition to that, aerospace, defense, medical, green, and the new buzzword, well, not so new, is the blue. So stainless steel is also going to have the tremendous application scope in a blue economy. If I talk about the raw material, iron ore is not the raw material for stainless steel, and nickel and chromium to that extent is not the part of the steel manufacturing. And of course, still today, stainless steel is made only through the EAF. Steel is basically, majority is through the blast furnace. Stainless steel industry has got very unique typical characteristics also. I am talking more from the flat product structure. It has got a very interesting mix of the public sector, private sector, corporate, and MSMEs. In fact, the total capacity of about 5 million tons in flat, 1/3 of that is in MSME, which includes about 60 induction furnaces and more than 500 downstream cold rollers. So you can understand how big or how small these MSMEs would be in the stainless steel manufacturing industry. If we talk about the capabilities, Indian stainless steel industry is capable of supplying to the highest level of the quality stringent requirement. To give you one small example, well, it is not small. The ITER, International Thermonuclear Experimental Reactor, being made at the cost of about 25 billion euros in France, being supported by around 15 nations. One reactor, which is based on the fusion technology of sun, is consuming 3,800 tons of stainless steel. This is the highest strictest quality requirement, and more than 80% of that reactor is being supplied by made in India by Jindal Stainless. So that is the quality level I'm talking about. It is contributing about 100,000 crores to the Indian economy from the supply side point of view. And of course, it is generating employment as per the capacity and the production. It is relatively small, but it's quite complex. So this is my take that stainless steel is quite distinct. It needs a separate focus. And that is the reason that stainless steel industry has taken a lead in creating a Vision 2047 document aligned with the Amrit Kaal. And it was released in the exhibition, International Stainless Steel Exhibition in Bombay in April. And it has got the blessings from the ministry also. Now, I need to set a context about the world around us because we are not alone. World has always been VUCA, but since 2018, that VUCA became super VUCA. Flows got disrupted thanks to irresponsible capacity expansions by my friends China and Indonesia. Globalization turned to nationalization. It started with Section 232 of USA, 25% duty all across. Then it was like a dominoes effect. Each stainless steel country, producing countries, started imposing trade barriers, and that to multiple ADD, CVD combinations, safeguard duties, and now the carbon emission tax by EU, which is going to happen. So every country has started becoming sort of protectionist or ensuring that their manufacturers survive first. China, Indonesia, everybody knows that they are known globally to provide non-WTO compliant subsidies of 20 to 30%. Every country is creating level playing field, but unfortunately, India has got zero level playing field. So that was the situation because of which the supply disruptions happened from 2018. It was a struggle, and then came the Black Swan pandemic. We all know the impact of that. I will talk about the numbers impact later. And then the recovery started. Recovery started because of multiple reasons, whether it was economic recovery, whether the demand started, infra spending, stimulus packages, vaccination confidence, logistics imbalances in getting, aggravating the situation. So it was a commodity boom. And whenever commodity boom happens, in case of commodity, because of the inventory valuation, people make better profits. But unfortunately, in certain areas, it is not perceived in a very, very positive way. It was followed by the geopolitical situation in Ukraine. Well, in case of stainless steel, again, it was more detrimental because both these countries are stainless steel consuming countries. There was no surplus availability of stainless steel, unlike in case of steel, where about 60 million tons became surplus sort of. Well, it is a different situation that in coming months, it started getting dumped into India. So this is the cyclicity of the situation, and it added to the increase in the prices. But since April, the commodity started melting down. There were multiple reasons. One is a routine, industry is cyclic, many other commodities, but the government controls on the supply chain to fight inflation. Chinese economy decelerating due to renewed COVID scares, and of course, logistics imbalances getting straightening out. So investors got unnerved and the global commodity started melting. So this is the situation at a higher level, which we have been seeing. But I think the participant would be also keen to know what is happening in the last couple of months around us. I will give a little brief on my learnings, primarily from the last quarter, July-September quarter, what is happening across the world. EU has been the hottest topic these days. Everybody wants to know what is happening in EU. In the last quarter, over the earlier quarter, there has been a significant 22% drop in consumption. But the 9 months over the year-on-year 9 months, it has been plus 9%. That means Q1 this calendar year has been much better. High inventories, competitiveness extremely going down, and they have to reduce the production because of course, uncertainties, weak demand, energy crisis, and of course, they have also taken the maintenance shutdowns. But the import intensity in Europe in last quarter has been 34% because China, Indonesia, they are focusing more on the cash flow and compromising on the pricing. In case of USA, things are a little better. Demand has been better in last quarter, though it was less than the earlier quarter, and 9 months it has also grown by 7%. Asia, the messages are quite interesting and conflicting also. In China, the demand has dampened. Auto is doing well, but zero COVID policy and the construction havoc, it has not leading them to grow the way they have been. Here also, the priority is the cash generation at the cost of the price. In case of Korea, we all want to know what happened after Akinamor. Flood damage was limited because of the inflated inventory availability and the weak demand. However, Korea, because of their high industrial requirement of the precision and alloys, and also for the auto, they are trying to balance the supplies by taking help of their overseas subsidiaries. It's not very clear, but it is expected that the full production recovery should be within December. Japan, except auto, demand is low. Taiwan, except electronics, demand is subdued. And a lot has to do with the dollar versus other currencies also. A little bit on the India first, then I will be talking more on the details. Our estimate is that the last quarter, it would be growing 10% over the earlier one. Auto, railways, process, tube industry, they are doing well. China import continues, and very interesting, I think it was in yesterday's paper that a huge trade imbalance between import and export from China. It was yesterday's news. Export from China in the first 9 months were about $90 billion into India, and import into India against the same number was close to $80 billion. It is average 12%. That talks about the malpractices being followed by the intermediaries between the 90 billion and 80 billion. It is average 12% under invoicing. And if I talk about specifically for stainless steel, this 12% can be as high as 30 to 40%. And it is not the under invoicing. It is the evasion of the BCD of 7.5% and also the GST of 18%. I'm talking about the malpractices related to the parallel economy. Now I come to, after the word, I first come to the stainless steel performance. Jay has given good numbers on how stainless steel is doing. If I look into the larger 40 years period, and if I talk about 5 key elements, stainless, aluminum, copper, carbon steel, and zinc, the weighted average of these 5 commodities has been 2.5%, whereas stainless steel is 5.35%. So that is a strength of the stainless steel. If I come to India, in India also the metal commodity including stainless steel growth is related with the economy. If I see the 10-year CAGR, it has been growing at a good 9%. FY20, it was about 20% growth. FY21, all of us know it was a pandemic, major issues. It degrew by about 16%, but in FY22, it jumped back by plus 25% with the total stainless steel demand of 3.7 million tons. Per capita is a function of population also. So our per capita, like most of other commodity, is perhaps 1/3 to 1/4 of the world. We are also keen to know what is the forecast, how the stainless steel industry looks like. It is, you see, if there is no black swan event happening, it is a mathematical model with certain intelligence based on the known knowledge to us. If I see the stainless steel growth at a pessimistic 7%, though it has been doing much better. If I see growth of GDP at a pessimistic 6.25%, though I'm very upbeat that it will be much higher, and population remaining even constant at 0.95%, though I am very hopeful that after 5-7 years, this population should also come down to 0.8 to 0.7% growth. With this mathematical model, from 3.7 million tons last year, in 8 years, it will go to 6.4, it's mathematics, 6.4 million tons, per capita around 4, 14 years, 9.5, and by the end of Amrit Kal, in 25 years, in 2047, it will be about 20 million tons demand, and the per capita would be more than 10. Well, ये 20 million ton के लिए capacity कहाँ से आएगी? This 20 million ton is about 1.12 times of the GDP, and it can be even much higher to 1.5 also. And this is the organic growth. I strongly feel that future is brighter because I will be talking about various impetus by the government, because I strongly feel that there are lots of opportunity for the inorganic growth. So this 20 million ton to me is likely to be higher. And for 1 million ton, the investment is anywhere between 0.8 to $1 billion. So the industry needs financial strength, and industry should also be investor friendly. Now I talk about the government impetus, how they are supporting stainless steel industry. and in some specific areas, maybe not so. Overall speaking, in general, I will say that the direction of the government is very bold, very futuristic, very transformational. Gati Shakti, Awas Yojana, Nal Se Jal, NIP, investment financing, digital rupee, sovereign bond, and so on so forth. It is going to definitely improve the competitiveness of the made in India product, but in mid-term and long term. The government's focus on the sustainability out of the three legs, whether it is the economic front, environment front, or the social front. Economic front, all of us know that as per empirical evidence, about 4 to 5% of the economy gets eroded because of corrosion, and this small 4% is equal to one Germany every year. Environment, carbon footprint, circular, social, things like hygiene, safety, and all those things. These are the three pillars of sustainable solutions. And the way government is focusing on that, to me, stainless steel is the best fit, though there is a space for all the metals, but stainless steel is a sort of a better metal, and we are privileged to be part of this industry. India to be made the manufacturing hub. That means the process industry and the manufacturing industry, the downstream, they are going to get a big focus. And once again, the stainless steel. I would like to say appreciation about our parent ministry steel, whether it is NSP, SIMS, standards, QCO, new FTA, scrap policy, brand India initiative, which is about to start. They are supporting us. So things are good in the overall macro view. However, there are certain national challenges also. Great to be the fifth largest economy, second population in the world. However, per capita, we are 168th per capita GDP. And in the top 6-7 economies, the China is 5 times to us, and we are the only economy in the 4-digit, just about $2,200. So we can understand the market. Cost of logistics, 13 to 14% of GDP, 42nd out of 167 countries in the logistics performance index, and we all know the cost of capital. So we do have challenges of the competitiveness and the competitiveness outside the factory gate. And these numbers related to logistics and cost of capital is not for stainless steel. It is for everything which is made in India. While we are upbeat on the midterm and the long-term opportunities and the betterment of the competitiveness of the industry, but yes, short-term, there is a challenge. Before we come to the government support on the short-term, how to overcome the short-term challenges, I think now we must talk about what is the role of the industry players and what should be our commitment and what we should continuously do, not only during the downturn, not only during the upturn, all along. To me, there are 5 broad areas where the industry must focus upon, but overarching to them is a common thread which is overriding, and that is a digitalization. IR 4.0. I will be referring to certain concepts which are independent topics on their own, and I will be very happy to talk about these independent topics separately. IR 4.0, in fact, IR 5.0 is also on the way. The traditional IR 4.0 has been machine talking to a machine. It was limited to the manufacturing. Then it got integrated into the processes and the functions, but not only FM, S&D, MM, production modules and things like that. The need is also to invest in a little advanced integrated processes like APO, plant maintenance, project system, BI, data analytics, and things like that. And also, above all, the external interface, seamless. I will be talking about that. So this is the overriding thread binding all the 5 major focus areas, which I strongly believe that industry must do. The first one is to improve the competitiveness and the value creation. Of course, operational efficiency inside the factory. Again, it is a topic in itself. I will not dwell more on it. And along with this, the supply chain management. I personally don't like the word supply chain management. I use the word customer expectations management. I will be happy to have a session on that also. Quality, whether it is the services and the behavior. Somehow the metal industry, we are into B2B brick and mortar industry. We sometimes forget the importance and the impact of the non-tangible aspects, which really helps in building the brands. And perhaps that is one of the reasons that Indian made exports is doing much better in the developed economies like Europe and US. Before this exports duty, 50% of our exports was to Europe, and 50% of that was to the North European countries like Germany. And once there was a discussion, a friend of mine in Europe said he was talking something about Asian, and I was not feeling good about it. So I reacted. He said, "Why you are getting offensive?" I said, "I am Asian." "No, you are Indian." So that talks about a general cultural advantage that Indians have. So the quality, not only the product, also the services and also the behavior. And though we are into sort of B2B, and some of us try to venture into a little bit into B2C, and however, I think the need is the customer has become so aware. My way of looking at it is BWH, business with humans, because at the end of the day, the decision maker is a human being, along with ease of doing business and the transparent processes. To give you a small example of what we are attempting, for customers, we have, of course, for pre-sales, C4C, e-commerce, Hybris, all the leads, visits, relations, ordering, tracking, pricing, validations, payment gateway, complaint management. They're all part of the system to the extent that a complaint is only closed when the customer closes it. The mill cannot close it. Suppliers, onboarding, quotations, contracts, settlement, all are on digital platform. And of course, the employees. So this is how we can improve upon the competitiveness and create value. On the lighter side, even today, my wife uses the word steel for stainless steel, and for the steel gate, she uses Loha. So creating awareness and skill development is a big challenge for all of us. I would put it into the three subcategories. First is the user connect with the supplier. People need to know what is stainless steel, how it is used, and from where you can get it. We have taken an initiative of creating a beta version of makestainless.com website, which connects the users and everything and anything about stainless steel. Creating awareness, stainless steel courses. Today, there are 11 institutes in the country, IITs and architect colleges having stainless steel course. This year, 75 polytechnics in Haryana and Odisha have inducted stainless steel as a mandatory and optional, and it is clubbed with the employment commitment. Next is ITI. Skill upgradation. You would be noticing that now these days, the stainless steel gates, grills at the airports and the households, they are becoming more visible. And somebody who has got a sharp eye, he will see or she will see a little improved quality of the fabrication also. Industry, and of course, we are the leaders, so we have the larger accountability. We have invested in 4 vans with different application themes. 15,000 local fabricators have been trained. A QP has been made with NSGC, and now those fabricators are getting a certificate which has got the Bharat Sarkar ki mohar. So that gives them the pride and something better employability and better earning. And now the downstream clusters are next. We need manpower also to meet that 20 million tons requirement in the country. Demand generation is another critical area through R&D and BD to increase the pie so that we get space for all the producers in the ecosystem. To just give an example, perhaps we are the only company in the world which has got 120 plus grades and variants, and out of that 80 were developed in last 2 decades as per the customer requirement and in all the series. Partnering with the various government for the new initiatives, specifically infrastructure like FOB and rebars and things like that, that will help stainless steel consumption grow inorganically in a big way. Self-reliance is the 4th big thing for me. We need to have the capacities and the capabilities. Like I said, out of total stainless steel, including long, is about 7.5 million ton capacity. In case of flat, it is about 5 million ton capacity, which is going to increase to 6 million tons by our own 1 million ton expansion coming within this year. However, the overall aggregate capacity utilization is 60% for multiple reasons, but Indian industry is fully capable. And the 5th point from my side is that absolute alignment with the national vision of 2047, whether it is ESG, whether it is a carbon, whether it is a brand India. So these are the 5 focus areas where we should deal all along, not only during the downturn, Otherwise, it cannot happen. However, to think and contribute beyond, somebody has to be healthy. And in case of a corporate, it should be financially healthy. So there, a role of the government also comes in, where a little bit of better handholding. We are very grateful to the new Honorable Minister of Steel, Mr. Scindia, very encouraging recent meetings with him. I will divide the enablers from the government side into three categories. From the midterm and the long term, first is the competitiveness. We are quite upbeat because of the multiple initiatives. We are very confident that logistics, capital, ease of doing, and ease of procedural clearances, they will be resolved in midterm. Demand push through public procurement, there we expect a little more support from the government. For example, life cycle costing to be made mandatory, and also melt and manufacture should be the criteria. It is our choice whether we want make in India or trade in India. And the third, but last in this, but not the least, is the short term. Today, stainless steel industry is going through triple whammy. The foremost is import influx from China and Indonesia. China, I talked about that under invoicing challenge. In FY22 over FY21, import from these two countries were more than 178%. In FY23, looking into the first 5 months data, it seems that it will be close to 300% over FY21. And Jayaprakash, it is likely to cross 1 million. You had shown something around 800 something. The import intensity, that means the percentage of import in the total consumption in the economy. In case of stainless steel, in FY21, it was 19. It got increased to 26%. It got increased to today 32%, as compared to carbon steel, which is less than 5%. People may think that Indian stainless steel ke saath hi aisa kyun ho raha hai? Had this industry been investor friendly, there would have been more players. And the players, they have been in the challenge. It is, I must appreciate the players who have been able to, because of their resilience, they have been able to face these challenges. The second whammy is the developed economies. They have become so passionate about their own manufacturing companies that they have started imposing multiple trade barriers. Like I said, ADD, CVD, safeguards, CBAM, and even on China, there are duties up to 190%, 190%. Unfortunately, we don't have that. And then the last one, the exports duties. Well, exports importance is known to all of us. For us, it's a strategy, whereas the domestic is a passion. And exports really teaches any company a lot of things. So I don't have to dwell why exports is important. And from the nation point of view, yes, we can talk about Forex and things like that. And in fact, based on the encouragement by the government, domestic industry has invested into the dedicated capacities, where the demand in India is too inadequate currently. Just to give an example, if I talk about a hot rolled stainless steel plate, which is an industrial process application product, the demand is 125,000 tons in a year. Capacity is 300,000 tons in a year. Domestic industry is supplying more than 90%, and there is export duty on that. So I don't know what it would have impacted. Similarly, 1500 millimeter width of cold rolled material. It is less than 8% demand of the domestic. Import is less than 1%. 50% have been exports, and there is a export duty on that. And then, of course, Indian industry has also made overseas investments who are based on the input from Indian suppliers. There would be a question: inflation is happening. What is the impact of stainless steel? If I look at it from the macroeconomic parameters, as per the manual of WPI of Economic Advisor DPIIT, stainless steel has an impact of 0.02925% in the WPI. So this is what stainless steel contributes. Yes, depending on the project type, there could be a little different percentage impact in the product. One question would be coming ki aaj kya kare? because the things are difficult. Well, my experience says that I believe that top line is vanity, bottom line is sanity, but the reality is cash and the cash flow velocity. It is again a different topic. I would love to share my views on this, how to manage the cash flow velocity. In the end, I would like to conclude opportunities huge, yes. Challenges, yes. Solutions, resounding yes. Together we can achieve. Thank you. Jai Hind.
Thank you, Vijay sir, for this very insightful by touching after all the business points, what all the possible, the questions which this industry has, and especially touching all the business categories like supply chain, market analysis, manpower developments, to all the policy support which may be needed from the government side, and then finally concluding it to the cash flow. So from cash flow in, I think we should head for the question sessions now. And this cash flow word, this is very significant right now. And this is not only for the, the finished segment, but also in the raw material side, specifically on the scrap side. All the MSMEs or small traders, stockers, everyone is facing the cash flow challenge. The reason being is the price volatility has been very higher for the stainless steel industry. If we see the levels in May and June, and if we compare it to the today's level, there has been a significant shift in the prices from the raw material to the finished one. And the prices are still widening. So there is still a challenge for the industry supporters. So as a responsible, please.
From the capacity perspective, from in 50 lakh tons flat today, we have got 1.9 lakh ton. So it is 37%. And from the share perspective, total market in flat, it is about 48%.
Oh,
Continue.
It is around half of the percentage market share. So what are your strategies, sir? Means how you are protecting your suppliers, how you are protecting your stockers, and so what will be your suggestions for the industry right now? Because they are in a crisis situation and they are looking after the next 6 months, what's going to happen. And it will be better if you can specify the segment wise, because the summer is coming now, the monsoon is over. So everyone is expecting that the demand should go up. So what may be your views?
Yeah, all of us have been going through this thing. This is not something new. We have been facing it. In the downturn, all these questions become very, very critical. We have been working on few things, and plus I have got my own experiences. It is easier said than done. But yes, I will be referring to my experiences and reasonably successfully implemented. Reasonable is again a little vague word. You see, a producer should not try to earn out of inventory gains intentionally, because inventory losses are too huge. We should be able to protect our margins. One concept is, can we try to match the QP of sale with the QP of purchase? Quotation period. Not so easy, but to some extent it is possible. Number two, can we make what we can sell? Traditionally, when organizations are into supply constraint environment, they tend to produce what they can produce, and then they get into the challenge. Concepts like theory of constraint can really help a lot. Specific to stainless, agility towards series mix can also help a lot, because fundamentally, if somebody tries to become a pandit, कि अब LME में ये होने वाला है, I personally don't believe that. I have the opportunities of interacting with the very, very big pundits who आज कुछ बोलते हैं, कल कुछ और हो जाता है, because these moments, when it went to 1 lakh, who had thought about it and what is behind it? So I would summarize that let's not be speculative. External influences may not be in our control. There are certain tools, but not so easy. changing your mindset from supply chain management to customer expectation management. It's not easy. Made to order versus made in anticipation is another concept. I would love to talk about it because it will take another 1 hour.
Sure, sir. So you have talked about the series mix. So I think we have also observed that Indian mills are more shifting toward the 200 series rather than the 300 series, just due to the nickel factor and the cost viability in the domestic market. So how is your strategies to cater that? Means on a production side or on a demand side, what you have seen, which sector and which series was more prominent in the last 6 months, and what will be, what may be the most preferred one for the next 6 months?
No, 1 second. You see, any commodity industry should not be, when we're talking about the strategy, let's not be transactional. And strategy is now never 3 months, 6 months. These are the black swan events. Many of us here, like I have the experience of 22 years. So we have seen, we should talk about something long term. It is not right कि हम आज कुछ कर दें, कल कुछ कर दें. Yes, some changes are possible to some extent, but the strategy should be a little longer term. To give you some perspective, you see, worldwide, 200 series is about 20%, 300 is about 55%, 400 is about 25%. If I talk about the flat product in India, it will be about more than 50% in case of 200 series, 30% in case of 300, and about 15% in case of 400. But if I talk about mile, it is more aligned towards the world with a little extra in 400 and 200. You see, in India, at least one awareness is there that multiple stainless steel grades can be very judicially used for a specific application. There is a shift towards 400, and also people have realized that nickel, whether it is LME or it is scrap or it is NPI, it's creating a huge imbalance. So it is better to go for those application specific grades and the combinations which make the things a little less volatile. So this is what we are trying to do, focusing more on the ferritics, and wherever required, good grades of 200 series also. But in certain applications, we are into the duplex, we are into very high grades of 309, 310S and all those things. So depending on the market requirement, we are adjusting ourselves.
Sir, during the COVID environment, we have seen there was the export numbers was very good.
We have been exporting traditionally 20 to 25% of our total production to exports. Out of that, 50% had been to Europe. I only wanted to tell you that Indian behavior, Indian product strength is well accepted by the developed economies.
Yeah. So how do you see, means how this export numbers, means government has imposed a 15% export duty. So definitely the margins may be lower side right now. So how is it working right now? Means
it is not working. Export? It is not working. You see, we are public listed company. अगर किसी का EBITDA 13-14% है, 15% ड्यूटी कैसे एब्जॉर्ब करेंगे? It is a decision which is a spot decision. We are, industry has made the representations. We are very hopeful that the perception that it is contributing to the inflationary, which I have already shared my views, that is a contribution. So somehow decision has been made. We are trying, and we are very hopeful that government should, do something positive. We are quite hopeful.
Yeah. So if you look into other sectors like aluminium, due to the high energy prices, industry is not competitive in Europe. So is there any opportunity for the Indian or the Asian mills that they can export? Means still?
We have been, like I told you, about 20 to 25%. You referred to our export performance during pandemic, because you see, globally, different economies were behaving differently during the pandemic. Even in India also, there was a very, very localized adverse impact of the pandemic. Kabhi Maharashtra band tha, kabhi Gujarat band tha. So there were certain opportunities available in developed economies, and fortunately, because of our consistency, having relations for the last 20 years and regularly supplying and our behavior, we got the opportunity to balance, and that is why we were able to take care of the employees also, take care of suppliers also, and the total ecosystem. During that tough time, we were able to manage well.
Yeah, thank you, sir. And I think one question is towards the policy side. Although you have already mentioned that what you need and what government is already doing. But what are the expectations? Means the 15% export duty is a big thing. Apart from that, what you expect that what government should play a role to strengthen this industry?
No country and no company in the world can compete China because of the practices being followed in China. We are not averse to imports because even if there is a good duty in China, there is a very healthy competition. Number one, because there are FTAs, whether it is ASEAN FTA, whether it is Korea FTA, and today when we compete in auto from Japan and Korea, in process industry from respectable companies in Europe like Outokumpu. We don't have any challenges. Throughout my this 40 minutes discussion, I never uttered a word other than China and Indonesia because they are respectable. And in any case, FTA se to duty free aata hai na. We don't have any challenges. So the cost of capital and the cost of logistics, these two elements today are making made in India less competitive by at least 8 to 10%. We are confident that in the midterm, because of all the initiatives, it will come down appreciably. But till midterm, everybody in the world is closing doors to China. We have opened the doors. Level playing field is required.
Yeah. Sir, on an import front, I think the prices in the domestic market in India is more influenced by the cheaper imports that you already mentioned that Indonesia replaced us as the second largest producer. So if you see the consumption part, the Indonesia consumption 10 times lower than what its capacity of the production.
25 times. 25 times.
Sorry. Thanks
25 times
so,
less than the capacity.
Definitely, the whatever capacity or whatever production is happening, that is for the export only. So, the India is very near, the rates are very lower. Second thing, the policy side means, I think that is also very good for the imports. Second country is the Korea, that is POSCO. Right now, there was some news of shutdown and breakdown. That's why the Korean imports are not coming to India. How do you see means how you tackle such situation means what are the strategies as a JSL means what measures you are taking to neutralize these situations?
You see, our services, our quality, our versatility, our range, our being closer to the customers, ease of doing business, all these things are helping us. And these are not new competitors for us. Korea and Japan, we have been competing healthily in auto segment. Today, our share in auto segment, you will be really surprised, is about 70% in India. And automobile, specifically in ferretics, it is not so easy segment. Auto segment, the way it is organized because of the influence of Japan culture here, serving them is not a very easy thing. It's not easy. So we are replicating all those best practices worldwide what are happening so that we are exceeding their expectations from an Indian supplier. Same is true for the process industry also. So in all areas, I tried to tell you those 5 focus areas, which I tried to tell you. It is not that it was a theory. It is what we are practicing. Somewhere we are a little behind, somewhere we are much ahead in the industry. So we are doing all those things which I shared with you.
Yeah. So there is one question from our audience also, and they are also interested to know means what are the safeguard actions which Indian government is taking to counter China and become more competitive. So, and he has also asked already, I think you have already answered that how export duty has impacted the Indian steel exports. So, still, sir, just.
Industry is presenting the facts to the government, and we are overall very satisfied with the government's larger direction. There is a very specific decision which is hurting the industry, and we are very hopeful that it will be considered by the government. We are trying along with the association and other industry partners.
Yeah. So I think looking at the time, I think it's time to close the session. But just the last question, sir, just to educate our industry people also. What are the demand segment in India for stainless steel, especially in the domestic? If we look into the domestic market, because India is a middle income economy, you can say it's a very developing one. So, what are the sectors which you are bullish on, and what are the current sectors, and which sectors can be means which sectors will have more demand in coming years?
You see, the traditional applications for stainless steel is ABC, architecture, building, construction. Though stainless steel is being used only for the decorative purposes, automobile, railways and transport, process industry and capital goods, durables and household, and others like maybe blade and things like that. So these are the traditional. We all know where railway is going. We all know where automobiles are going. We also know where the government focus on infra, NIP, waterways. So the traditional and manufacturing. So the traditional applications are going to go up in a big way. Plus that evolving and the strategic new applications like the focus on the defense. A lot of stainless steel is going to be used there, and that green economy, that to carry that green, that cryogenic temperatures, stainless steel is the best fit. And we have got a coastal line of 7,500 kilometers. So whether the infra on the coastal lines and the upcoming, the blue economy, there also stainless steel, because of its inherent strengths, becomes the best fit solution for the nation.
Thank you, Vijay sir, for accepting our invitation to join this webinar, for your thought-provoking insights, and thank you very much. Lalita, over to you.
Due to time constraints, we have to bring this webinar to a close. Again, a big thank you to Mr. Sharma for his insightful views and the viewers for joining us in this webinar. We do hope you all enjoyed the session. Also, we would like to thank our supporting partners, ISA and Ministry of Steel. This is your host, Lalita, signing out along with my co-host, Jay Prakash. Thank you, sir.
Thank you. Namaskar.